Welcome to the Traders Clinic, your regular shot in the arm of trader insights, philosophy and knowledge, brought to you by two professional money managers, Ali Crooks and Charlie Burton.
In every show, we cover your burning trading questions and cover all sorts of topics from the world of trading.
Welcome back.
Like your shirt, mate. I've gone casual again.
Yeah, I know. Yeah, I
Still thinking it's summer.
Yeah, exactly. Yeah, and yet it's probably October. Right.
Here we go. Right, so we're going to start with a question this time. Normally we come with a question, but we've got basically two really good questions today. So the first one is 15% return realistic on a 30K account?
Yeah. This was a question that I had from a new trader. So he wanted to know what was a realistic return. And actually, a 15% return is highly realistic for an individual trader. However, there was something else he said, but I don't want to lose any money. That's the slight catch there.
Yeah.
So at almost no cost. So you're saying that on day one, on your very first trade, it has to be a winner. And then the others have to be winners because you don't want that balance to go below £30,000. So to me, there's red flags, being waved all over the place here. So yes, in principle, 15% is realistic, but as a return. But if you want whatever return you want to make, it does vary from approach to approach. But you've got to be willing to accept a 50% drawdown of the potential gain that you're going to make. Now, it could be, depending on your style, could be more, could be less. So if he's not willing to take let's say a 7.5%, 8% drawdown in order to achieve 15%, then he's not there. So what I said is, well, you're obviously at the moment, you've got £30,000 to trade with, but you haven't earned the right to trade with that £30,000. So forget trying to trade with £30,000 right now. Trade with 5,000 and then earn the right on 5,000 to start incrementally increasing. You don't have to go from 5,000 to 30. You could trade with 5, start to feel good about I say feel good, you know what I mean? Build your experience on 5, then up it to 10, etc., etc. The problem that we have here is the same problem that we have everywhere. That individual has already costed out, well, on £30,000. If I make 15%, that's £4,500. That pays for the family holiday or whatever it might be. They start doing the maths. And then when they get told, oh, no, you're only allowed to trade with £5,000. Well, yeah, I get that. I need to earn the right and everything else, but it's not what they want to hear. Now, I've got something else to add to this, but you go first and I'll add on.
This is great. There's so many things here. So what I find really interesting, because I've had similar types of questions, is if I would say what if you were to invest that 30,000 into, let's say, a load of shares or, I don't know, some ETFs? Would you expect those shares or ETFs to only go up in value? And the answer I get usually is, well, no, I would expect the value to drop at some point. And I'm like, okay, so why is it okay for your £30,000 invested into 6 stocks or whatever ETFs to drop down to, let's say, an overall value of 25, but it's not okay for that to happen in a trading account? And I think it comes back to the fact that when somebody's investing that 30,000 into stock shares or ETFs, there's something behind it. So there's something tangible. They own it. But I think what the underlying fear is that's cash. So if my trading account drops, it's my actual money that has
crystallized.
Is crystallized, exactly, and that's gone. And I think that impacts, and that's that essentially that question is coming from fear. And the challenge there is, if you're already asking that question from fear, which is basically I'm happy to only make 15, but as long as I don't lose anything, it's like you're already not in the right place to be trading 30,000 anyway. Yeah. I mean, no trader really is if it's their first out of the blocks. And I would be saying, okay, but you've got to think not just whether or not, like you said, if it drops, 7.5%, you ought to expect 7.5%. Is that 7.5% could happen almost at the starting blocks. You could just through random distribution be doing everything right with your trades, but you just come into the market at the point where you're hitting a drawdown on that particular strategy. So that's the thing that I think most traders don't prepare themselves for, is they go, well, 15% at the end of the year. And even the traders that are willing to take a hit say, are you willing to take a 7.5% hit for a 15% return? Yes. Are you willing to take a 7.5% hit right up front, just through random distribution to then make the 15? And I think that's where most traders aren't thinking.
No. And what was quite interesting is just a short while later, so I'd given this advice and said, look, you need to earn the right to do this. You're not ready to do that at the moment. And just a short while later, he was saying, is it possible that if I trade much bigger size but really, really small stop losses, could I do it that way, sort of thing? So, and this is the thing, it comes back to what we've talked about in recent episodes, actually, where you give people a piece of advice. Excuse me, I was going to cough in. And you're not telling them what they want to hear.
Yeah.
So they then try to ask a different question, hoping for a different answer. Well, if I put a bigger position size in, because what it comes back down to, he wants that money. So he's already got that money, as we've just said, in his mind. Right, I want to make whatever. Let's say it's £5,000. Excuse me, on that capital. Well, if I traded bigger size but really tight stops, so I can put a bigger position size on, so I'll make more money on those very small stop positions because my position size is bigger. Then I'll still make that money. So I could do that. Yeah.
Oh,
So yeah, I think the thing to take from this is, earn the right. Even if you've got money to trade with, you don't have to trade with that full capital straight away, because you may not mentally be ready for it. And so you're better off staggering your money up over time, whatever your capital is, the total capital that you've got, and don't think that you're going to be able to deal with the emotional consequences of trading straight out of the block. So respect the capital, respect the markets, because the market won't respect you, and the market will be constantly luring you in, as you said in a previous episode, luring you into making mistakes. The market, the little devil, is in your ear, constantly trying to get you to make mistakes, and the capacity to make those mistakes is even greater with the more capital that you're trading with, if you're not ready for it. And especially when someone says, yeah, but I don't want to lose any of that money. Well, you shouldn't be trading at all on that money. Now, if you trade with 5,000, are you prepared to lose 1,000 or whatever, 2,000 of that? Oh yeah, I'm a bit more comfortable on that. Right. Okay. Let's go there and then we can work.
Yeah. And
otherwise, I can't work with you.
I think that's a great way to, it's a great, I think people expect people like us to be able to find them the solution. They're trying to wriggle. I would say they're wriggling out, like, oh, well, if I move my stops up and have tight stops, oh, can you authorize bad behavior?
Yeah.
But the trouble is the traders never traded before, so they don't know what they should or shouldn't be doing. So get on the job with a smaller amount of money and start to see how you react. And the majority of traders, as we know, when they start with a smaller amount of money, still succumb to the same things, that they still go through the same learning loops, they still go through the same mistakes, they still have the same fear and greed tendencies. So start small, so at least you're aware of where your strengths and your weaknesses are before you start trading with big money.
Brilliant stuff.
Good.
Okay.
Right, on to our next question. Are you successful as a trader just because you get paid out once?
This is in reference to...
I'll give you a bit of context.
Right.
This is a trader that has been paid out. They've gone through a challenge. So they've done one of these prop firm challenges.
Okay.
They've passed the challenge and they've been paid out. So they've had their first payout.
Mm-hmm.
Is that a definition of success? I mean, I see you smiling. I know where I'm going with this, but do you want to start things off?
Yeah, I've had similar in that people have had one or two payouts and then failed and then had to start again, but they still see themselves as a successful trader. Now, there are two ways of looking at that, because the parameters are really quite tight. That I don't know, whatever it is, 4%, 5% drawdown, and that's it, and you're out. sort of thing. You've got to start again. So someone might say, well, I am successful. Yeah, you might well be, but you might well be better served being successful trading your own money rather than with those really tight parameters that are usually going to come and get you. So I don't see someone who's had a payout or even a couple of payouts necessarily. I don't think it's enough time
No.
to say that you are a successful trader just because you've had a payout or so. I think that market is rigged against you, and so it's even harder over the longer term to be profitable. That's my view on
Yeah.
that.
I think the fact is you're seeing a lot of new traders only going in this route. So it's the only mental model they're seeing, which is apply for a challenge, pass the challenge, and then trade the hypothetical capital, get paid out, get paid out, get paid out. So it becomes about being paid out. So again, the tendency there is to be results orientated rather than process orientated. So if you're going to do something like a challenge, you've got to look at it long term, because surely your plan as a trader is not to pass a challenge, get 2 payouts, and then you're done. Surely there's an objective whether you're going to hopefully get paid out and build up your own account, and then you're going to be able to trade independently of a firm that is totally reliant on new traders coming in to be able to pay out the traders at the bottom.
Yeah, it's a
So
Ponzi.
it's a Ponzi scheme. So having that awareness, I think a lot of traders don't see it. And we've talked about this on other episodes, is ask yourself the question: if you had £100,000 of your own hard-earned money and somebody came to you and said, I've made 10% in 1 month, and that's the first month I've ever traded, would you hand over your 100,000 to them? The answer is no. So you've got to look at it from the point of view that I want to be consistent over, and I say this to traders, and I ask this to traders, what's your timeline? And nobody says I want to be consistent over 3 months. They want to be consistent over 20 years, 10 years, whatever it is. They've got a goal, and it's further down the line. And any trader that wants to be in and out within a couple of months, they've not got the right mindset. They're focusing too short term. So I would argue, redefine your definition of, you define what your definition of success. We can't sit here and say you shouldn't be using prop firms. This guy obviously is, but do you think you're consistent over 2 months just because you've had a payout? You've played the system, and okay, great, but surely you want to be, as a trader, independent of these companies that are holding you to ransom. And a lot of them, they're changing the goalposts. They're changing the goalposts. The consistent traders, and I know a couple who've done very well. They said, they're changing the goalposts now because we've been doing too well. So you're totally at the mercy of these people. So wouldn't you want to develop your own consistency over the long term anyway?
Exactly. I mean, one thing that I think is a real positive is that some of the larger brokers out there are now starting to, because look, let's be brutally honest, these funded account programs, it's all demo accounts. So they're paying you, as you said, they're paying you out of the profits they're making from all the people doing the challenges, and that's where it's a bit of a Ponzi for a lot of them. But there are some brokers out there now who are genuinely putting up monies. I know broker Tickmill are doing and it's real money. So if you prove you put yourself through a program, you open an account with them, and then you start trading and you do well by on your account with them, then you can put yourself in a position, because they're doing it running it as like a competition. That's what they're going to be doing. But it's a genuine £100,000. It's not some fake stuff like there. So there are some positives that have come from that industry. I think that industry will disappear, or it's going to radically change, because the regulatory authorities don't like it, because it's the Wild West.
Yeah.
And we've seen firm after firm go under. Some firms are better than others, admittedly, but at the end of the day, it's a business which suits those businesses. And so I would rather, like you, people trade on their own brokerage account, build their money up by themselves, rather than chasing that dream. And that's all that is, unfortunately. It's dream chasing. And get real, trade your own money. And actually, like I just said, some brokers are actually starting to offer up their own. Sorry about that.
Sorry, mate.
I'm apologising for you there, but
Yeah.
but some brokers are offering that, so that you can actually do it in a genuine way. But I would still say that the best way to trade is gain consistency. And if you really are good, money will come to you. You'll build your own capital. You can add funds to your capital, and the potential to then trade other people's capital once you've got 3, 4, 5 years track record is going to be there. And sorry, Ali's got a slight cough at the moment. So
Talk of funded accounts makes me feel a bit ill.
and on that note, I think we're going to have to call it a day.
Yeah, hopefully I'll be at the next episode.
His name's Ali Crooks.
His name's Charlie Burton.
Trade safely out there.